Okay, so now I'm going to get into some really juicy stuff. These one little tweaks, the vast majority of advisors miss this. But let's say, and this is relatively new, that at retirement, you remember I talked about the situation when you have some after-tax dollars inside your retirement plan, and that's what the question about the proration that I had earlier goes to. So let's say, for discussion's sake, that you were working, you were doing pretty well, you put in more money than you were allowed to deduct for federal income tax purposes. So in effect, that was an after-tax contribution. Now, the growth on that money is still taxable, but since you didn't get a tax break on that money, when that comes out, that shouldn't be taxed. And if you take out, let's say you just take out some dollars and you don't bother distinguishing, that's when we get into the proration rules. So just to make up a number, let's say that you had a $50,000 of after-tax dollars inside your $1 million IRA, and you take out $100,000, then you would say, well, 5% of that would be prorated as a non-taxable distribution. But you don't want that. What you really want is you want to be able to separate the after-tax portion of your IRA from your traditional IRA. And then with the after-tax dollars of your IRA that's inside your IRA or in your 401k, you want to make a Roth IRA conversion because that money does have what's called basis. So you can make that Roth IRA conversion without having to do the proration rules if you qualify. And here's the way you do this at retirement. Under the new, and I'm going to give you an IRS notice on the next slide, you send the pre-tax money to a traditional IRA, you send the after-tax dollars to a Roth IRA. All right, and by the way, if you're still working, write this down: www.irs.gov/pub/N14-54.pdf. I will leave that up for a little bit. And that is the ruling. Now, I can't tell you how many people miss this. And so many advisors, if you are retiring, there are two things that you have to take into consideration. And if you don't, which most advisors miss, you're going to lose thousands, maybe tens of thousands, maybe hundreds of thousands of dollars in value. If you miss this issue on a $50,000 after-tax IRA, it could cost your heirs $500,000, and it doesn't cost you a dime to get this right if you or your advisor know what they are doing. All right, so you want to take advantage of this idea. All right, now, so that's one area. All right, two, if you have after-tax dollars in your IRA already, and it's already in an IRA, in other words, it's not part of the 401k, it's nothing that your employer can do, it's already there. And Ed Slott likes to call this the coffee and the cream. How do you get the cream out of the coffee? Well, and unfortunately, I'm starting to run out of time, but there is a very cool way to do it. And again, boy, shoot, I'd love to do this more in depth. I am running out of time, but basically the way you do it is you separate the coffee by the cream by setting up your own 401k plan, a one-person 401k plan. I actually have a whole chapter in my dedicated Roth IRA conversion book, which is one of your bonuses, and we have really cool bonuses coming up. And it is called something like getting the qualified or converting the non-qualified money in your IRA to a Roth IRA without having to pay the tax. As usual, I've gone over my allotment of time, so I'm not going to be able to cover that at length. But it is a very, very cool way of doing things. And some of these ideas, even just like that little idea, that might save your family $500,000. All right, so who might you listen to in terms of, does it make sense to have an advisor? Well, this is so we go back. Jack Bogle was on my radio show. And this one we actually did live. I actually drove to Malvern, Pennsylvania, which is not far from Philadelphia. And we actually have this on video. It's very cool. If we had time, we'd probably run it for you. But at the end of the interview, I always used to ask my radio guests, so is there anything that we didn't cover? And Jack Bogle went through a couple of things regarding asset allocation and a few other things. And by the way, if you don't know, Jack Bogle was the president of Vanguard, the founder of Vanguard, an American hero, in my opinion. But the financial advisor is, this is Jack Bogle speaking, the financial advisor is very valuable for the things we don't think about, like asset allocation, Roth IRAs and Roth IRA conversions. System is loaded with nuances. Estate planning is a whole other complexity. So with this complex world, I think people need some kind of help. That came from Jack Bogle himself, who is known worldwide for low fees, and Vanguard being a low fee provider. So why don't we step back for a minute, talk about some of the things that we have talked about. Well, we talked about shifting from the taxable environment to the tax-free environment. We talked about some of the math of Roth IRA conversions. We covered the Secure Act, not as thoroughly as I have in prior webinars, but we touched on it. We talked about tax-free conversions to a Roth when you have the money to pay the taxes on the Roth IRA conversion, and even some strategies that you might consider even if you don't have the money to pay the Roth, to pay the taxes on the Roth IRA conversions. We talked about HELOCs and reverse mortgages and a few of those other things. So if you are, and if you are a do-it-yourselfer, and again, you'd rather have a root canal than pay an advisor a nickel, I say good luck to you. Take advantage of all the bonuses. Listen in. More people. We would never ever have capacity if even 2% of the audience used our services. But so for many of you, great. Use the information. I am genuinely happy. You know that I have gobs of information, gobs of different types of information. We're going to be presenting different types of webinars in the future. That is great. But let's say that you say, hey, Jim, I know better. There's a couple things I don't want to do. I don't want to pack my own parachute. I don't want to make my own financial master plan. Because many people, I would even say the majority of the viewers here, their quote master plan is really the result of a bunch of individual decisions. At some point, they might have gone to their employer for how much money they should put in stocks and bonds. They might have seen a CPA who talked about Roth IRAs or Roth IRA conversions. Maybe they went to an attorney and the attorney said, okay, you need some wills, we'll draft some wills and some trusts. And maybe they went to an insurance guy and the insurance guy said, well, you need some insurance. And who knows how you got to where you are now. And it's most likely you got to where you are now by making a series of individual decisions. And frankly, each one of those decisions seemed to make sense at the time. But that's much, much different than having a planned master plan that takes everything into consideration. And it also takes into account that the different people who are working on your account, the CPA, the estate attorney, the financial advisor are all talking with each other, and you're taking all these things into account, including, again, we're talking about your unique financial master plan, of which Roth IRA conversions and how much and when is only one component. It's also gifting and spending and the best estate plan and what you should be thinking of, and just a lot of things, and it's going to be different for each person. So let's say that you are interested in this, and again, it's going to be very individual, and you're looking for short-term, long-term solutions. Well, we can help you do that. We call it running the numbers, how much you can spend, the best estate plan, Roth IRA conversions, et cetera, et cetera. You are in the room, usually not in person, and for over a year, we didn't see anybody in person, but you're in the room virtually, not whole the whole time, but while we are making a lot of these calculations. So you are part of the process while we are doing the work of doing this master plan, and you have a lot of input from it. In terms of deliverable, it will be a report. It will analyze, it won't analyze 100 scenarios, but through this process, which starts, by the way, with a consultation with me, and I begin the process, and then it is continued with an estate attorney and a CPA in our office who is the number cruncher. The deliverable, if you will, is a report, and it's not 70 pages of gobbledygook. It's more like, okay, we looked at a lot of strategies. We narrowed it down to about 4. Here is the 4 that we narrowed it down to. Here's the spreadsheets and the support for all 4. Here's the one that we seem to like the most. So it gives you this financial master plan moving forward. And again, we do review your wills, your trusts. We make very specific recommendations for your attorney to implement. And the optimal plan, we believe, for living and dying. The cost of that, the minimum cost is going to be $10,000. For a more complex situation, it's going to be $15,000. I will be very honest with you. We do not have a lot of room for those. We have some, and it will likely be a several-month waiting period. I will likely talk with you and start the process before that. The estate attorney has more availability, but the CPAs are backed up. A better model, we believe, for everyone, for us, for you, for your heirs, is a continuity model, meaning the running the numbers is kind of a one-time deal. People usually come back, but where our asset under management approach is we are going to what we call run the numbers, do everything in that $10,000 or $15,000 engagement, but you're also getting assets under management, personal engagement with our joint venture partners who are wonderful money managers. And I can go on and on about the money manager. Obviously, you would need to meet the money manager before you committed to this. And it is $1 million minimum, but the idea is it helps you get the most out of what you've got. Eric, could you close the window, please, for noise? This is the no worry, done for you solution. All right. Again, it is a minimum of $1 million of assets under management. One of probably the most frequent source that we are referring clients to now for the money management portion is Adam Yofan of Buckingham Strategic Wealth, who, by the way, is going to be on the Q&A tomorrow. But they use I'm talking about the door over here. They use the best set of enhanced index funds on the planet called Dimensional Fund Advisors. They have another great set of funds. They have a 40-point process themselves. It has some overlap with ours, but they would be a great choice for assets under management, even forgetting the value that our firm would provide by running the numbers. And the way it works is the fee is, it's pretty comparable to other asset under management arrangements, which would be 1% of the amount that they are managing. It's less the amount manages is more than $1 million. And we split that fee 50-50 with the money manager. So you pay one fee, and what you get in return is you get us doing what we would otherwise charge, and this isn't a pretend number because we literally can't fulfill demand for it, that we would charge $10,000 or $15,000. So you get that. And by the way, you get an update every single year when we do our review. You get Adam and his team that are great money managers that have their own 40-step process. And it's all for the same cost that you would get if you went to a money manager that didn't have this 40-step process, didn't have all these wonderful low-cost enhanced index funds, didn't have our process of running the numbers. So I'll look you right in the digital eye and tell you I don't know of a better arrangement. And I've been in front of thousands of advisors, and I've seen a lot of different advisors. So we believe it is a win-win-win. What do I mean for that? It is a win for our company because we get to do what we love, right? I'm not a money manager. I don't want to be a money manager. I don't want to hire and oversee money managers. I want to take somebody who is already a great money manager and say, hey, use them for money management. All right. So it's really good for us. It's really good for the money manager because he gets a great client handed to him on a silver platter. And I'm not going to hand them a pain in the butt because if you're a pain in the butt, I'm not going to do business with you. We don't need it. And by the way, I'm not kidding. If like you've gone through 6 advisors in 7 years and you're always nitpicking and why is this $24 fee on here? I'm not interested. So I'm going to hand him a great client on a silver platter. He's not going to have to worry about some of the stuff that we do. And he loves managing the money and doing his 40-step process. All right. But we think the real winner is you because you're going to get this great financial master plan. You're going to get it implemented. If you're out of Pennsylvania, we're not going to do your wills and trusts and IRA beneficiary designations, but we're going to spend a lot of time making sure that they get done right, either using your own local estate attorney or maybe one that we recommend. And we're getting more and more estate attorneys as we continue to do this work throughout the country. So we think it is a win-win-win. Now, if you do happen to be a Pennsylvania resident, then we can draft your wills, your trust, your IRA beneficiary designations consistent with what I've been talking about today and consistent with what I am going to be talking about at 10 o'clock tomorrow when I really recommend that you listen in, and that's going to be about trusts and probate and controlling from the grave, and particularly with an emphasis when the underlying asset is an IRA or a retirement plan. And if you're a Pennsylvania resident, then we can do the entire estate planning package. If you're not a Pennsylvania resident, again, we review the documents, we go over the documents, we make recommendations, we get in touch with it and communicate with your estate attorney or somebody that we recommend. And we think that that is a great process because then, in effect, you have, if you will, one group that the right hand knows what the left hand is doing, and you end up with a great coordinated financial master plan. And if this sounds good to you, what I would do is there should be a link there to click on where you are signing up for a consultation with me, and whether it's for running the numbers or more likely assets under management. And that starts the process. The thought that I would not come up with at least 2 ideas that would save you a ton of money, that rarely happens. I've done a lot of consultations over my 30-plus year career, and not one person has ever said or even hinted, gee, Jim, this wasn't worth my time to do this. Now, being very honest with you, there is a reasonable chance if I don't think that we can provide a lot of value and preferably many times what our fee is, I might just say, hey, no. And we do ask you to send in a bunch of stuff. We ask you to fill in a list of assets. We ask for your investments. I want to review your wills and your trusts and your beneficiary designations to see if you really do need help. Most likely you do. But by the way, let's assume everything is okay. It doesn't happen often, but it does. I'm going to be the first person to tell you because I don't need to create work when it doesn't. We have so much work right now that I genuinely love to help people, and I love to. And in my office, we're the same way. And not that your situation now is a mess, but let's say by our standards, it might be a little bit of a mess. And we take this chaos and we go through this process, and when we're done with this process, we have order and savings that can sometimes be in the tens or hundreds of thousands, on the bigger ones, well over $1 million in savings. And we're going to take a multidiscipline approach. We're going to look at the income taxes, with a large extent to what we've been talking about today, which is Roth IRAs and Roth IRA conversions. We're going to take a look at the legal. We're going to take a look, assuming that you are interested in the full approach of the investments. Again, I've done thousands. No one has said it wasn't reasonable. And when you are done, you're going to have an actual actionable plan for maximizing retirement prosperity and general wealth. If I were to build this consultation on a value basis, sometimes just the consultation with me for an hour can be worth tens of thousands. I sometimes give people ideas that can save their family $1 million. Conservatively, this would be valued at $1,000. But I don't do this to make the $1,000. I do this to see if we are a good fit to do business together. And since the last time we checked, we have a 97% retainage rate for our assets under management clients, meaning that once somebody becomes a client, they tend to stay a client. And that is the model that I work with, which is to get a select number of clients, typically IRA and retirement plan owners, work up this master plan, get the mechanics right, get the estate planning right, get them in a much, much better position, and then continue to monitor, update the plan, update the investments, again, that's part of the money manager's job, and then do reviews every year or every time like a situation comes up, maybe a wedding, maybe a grandchild, maybe a change in circumstances, maybe a vacation home, etc. But I like the idea of continuity of care. And frankly, I get the greatest satisfaction from people who I've been serving for many years. And I'm hoping to grow that group. But the way you start is you click the link in the chat area to schedule. So the Retire Secure consultation, it is with me. It is not with my guys. At some point it will be with my guys, but at this point it is still with me. Whether you're interested in the financial master plan, which again is starting at $10,000 and might be as high as $15,000, for which there is a waiting period. And the wait to see me isn't nearly as long as the wait to actually have the CPAs crunch the numbers. But by the way, even starting with me, we often have a lot of action points that you don't even need to run the numbers. Or if you're interested in the assets under management. In either event, they both start with, or even if you're interested in estate planning and wills and trusts because you're a Pennsylvania resident, and we can do that for you. I'm not allowed to promise investment results, and I wouldn't even if I was allowed to. But what can I guarantee you? I'll look you straight in the digital eye and tell you that I and the people that we work with, we genuinely care about you. We are true fiduciaries in the truest sense of the word. We are always going to put your interests ahead of our own. And I will tell you that you would be working with a great team of CPAs, estate attorneys, and money managers. And I think that you would see that if you are a good candidate to work with us and you go through our process. We work hard. We will always put your interests ahead of our own. We are true fiduciaries.